Hello and welcome. You're watching Too Sharp with ET, your daily dose of two important news developments that you must know about. I'm Nisha Poddar and let's straight away jump into it. So Trump's tariff tantrum could hurt India's $4.5 billion metal export industry. And markets gained today. Nifty inched closer to 25,000 mark, exuding confidence, and we'll tell you why. US President Donald Trump signed a proclamation doubling the tariffs on steel and aluminum imports to 50% this week. Now, the move is already in effect as of June 4th, sparking fears of a renewed global trade war. Now, India, with $4.5 billion worth of exports in these categories, is particularly vulnerable. In fact, according to the Global Trade Research Initiative, India's exports to the US in FY25 included $500 million worth of iron and steel, around $3 billion in articles of iron and steel, and about $850 million in aluminum. Now, a significant chunk of this particular output, remember, comes from the smaller companies, from the SMEs in Maharashtra, in Gujarat, Tamil Nadu, where layoffs now seem inevitable, is what experts believe. Now, Moody's ratings warns Indian exporters face intensified headwinds. The Aluminium Association of India flags mounting stress, while the Engineering Export Promotion Council warns the 50% duty could derail the $5 billion in engineering exports. In fact, that particular council, EEPC, suggests that India should push for an exemption like the UK did under the ongoing bilateral trade agreement with Washington. In fact, the UK also secured its waiver after high-level talks in Paris, and India is yet to receive similar treatment. Looking at some of the data, India's steel exposure to the US is small in global terms, just $450 million, but strategically it is critical. The fallout won't just hit exporters. Automobile suppliers, infrastructure projects in India could also face cost spikes as input prices rise. Larger steel makers in India are worried that India risks becoming a dumping ground due to trade diversion. And that India will also have to look at more protectionism like the other countries are doing. Meanwhile, Union Minister H.D. Kumaraswamy called the impact minor on India, but the industry leaders disagree on this particular thought. In fact, India has filed a notification with the WTO signaling possible retaliatory tariffs on $2 billion of US exports, echoing its 2019 response to similar Trump-era duties. Now, this could be a bargaining chip in the ongoing trade negotiations. Now, India has been a net importer of steel for 2 years straight. In FY25, imports rose 9.2% to 10.5 million tons, while exports dropped 27% to 6.3 million tons. Now, that trade imbalance has already eroded margins and also stifled capacity utilization. In response, India imposed a 12% safeguard duty in April on flat steel imports. Fitch Ratings says that Indian steel makers may soon face fresh pricing as well as demand pressure, especially if the global surplus headwinds heads east. Now, we are indeed living in an era of uncertainty when it comes to global trade and also in an era of growing protectionism. Stock markets ended Thursday on a strong note, lifted by the gains that were seen in a few pockets like pharma stocks, Reliance Industries, and also positive global cues aided the sentiment. So Sensex jumped 444 points or 0.5% gain, while Nifty rose 131 points at end. But the good news is that the intraday Sensex had surged 913 odd points, and Nifty briefly touched 24,899 level. Sectoral action remained broad-based, with Nifty Realty up 1.75%, Nifty Pharma gaining over 1%, IT, Metal also added 0.5% each. So the broader markets joined the rally. Nifty small caps gained 1%, while mid caps rose 0.7%. Here are the four key factors which really impacted the markets. Weaker US dollar as well as bond yields had an impact as dollar index dropped to 98.82, marking a 0.4% decline in over 2 days. And US bond yields also followed. The 10-year yield fell to 4.35 and the 30-year bond yield to 4.686%, and that boosts our sentiment. RBI rate cut hopes also is a big booster. 25 basis points rate cut is being priced in tomorrow, that is Friday, and the third straight reduction is likely to also ease some liquidity and giving some relief. FIIs also return after 3 days of outflows. Foreign institutional investors turned net buyers today, pumping in over 1,000 odd crore rupees on 4th of June, and DIIs extended their buying streak for a 12th straight session, investing 2,500 odd crores. Crude oil prices, they slid, fell by 1%, and that is also a big relief for the Indian market. Macros look much better, and that's why also remember that the Saudi Arabia and all the global talk on oil is putting pressure. Now, markets keenly awaiting a few of the data points like US jobs data as well as RBI's rate cut tomorrow, and all eyes would be on two important factors as markets digest these big cues coming in. So all eyes would be on the RBI's monetary policy. With that, it's a wrap on Too Sharp with ET. This is Nisha Poddar signing off, but do stay tuned to ET Digital. Goodbye.